Insight, where we get you up to speed with the day's options trading. Let's do that today with Christian Fromhertz. He is Tribeca Trade Group CEO. Lots to talk about here, and I almost feel bad asking because I'm sure you get this all the time, but I'm looking at a VIX. It's below 17. Really feels out of step with what we're seeing day to day. When does it move higher?
Well, it's a great question and great to be here. I think one of the things that people forget about, because the VIX, some people call it the fear gauge or the fear index, and it's really not that. It's just measuring short-term implied volatility in 30-day S&P options. And if you look at the S&P and the range that it's been over the last month, it kind of makes a little bit more sense why it's under 20, because we really haven't gone anywhere in a month. There was a trade that hit the tape yesterday that is getting some attention because of the size of the trade. There was a print that went up of 300,000 contracts, the VIX September calls. But when you take a closer look, it's not an outright bet that the VIX is going to 60. It's actually a ratio spread. So they actually bought 100,000 of the September 40 strike calls, and they sold 3 times as many of that, 300,000 of the 60 strike calls. So in this sense, right, again, you look at this and you say, wow, that's a big trade, but what they're actually doing is betting on the VIX possibly staying under 40, because they'll actually collect premium on that of about 48 cents when you do the math on that trade. Now, of course, they will get rewarded on that trade as well if it does go from 40 to 60, but really they're not expecting any major situation because they're selling 300,000 contracts of the 60 strike.
Christian, that's so interesting because I know that trade turned a lot of heads. Mine included definitely a head scratcher, so appreciate you walking us through that. Let's take a hard pivot here and talk about the banks, though, because when you think about this lull that we're seeing, at least when it comes to the VIX and other traditional volatility measures, it feels, again, really out of steps with what we're seeing in the banking sector specifically. What's your view on some of the cross currents there?
Yeah, I mean, it's definitely something I think that everybody is watching, but I think overall, if this situation kind of gets a bit more under control, and one of the things that I noticed was in the KRE ETF yesterday, it traded on record volumes around the low, so it kind of felt like a little bit of a capitulation when you look at that ETF that traded just an enormous amount of volume, and then made like a hammer bar, which indicates that a reversal basically happened off those lows. So if that could stay contained, of all the earnings results that we're getting, there's a lot of actually good results that we're seeing and a lot of good pockets of strength outside of those regional banks.
Absolutely. That's been definitely one of the narratives. Earnings not as bad as feared. I know that you're keeping an eye on the biotech sector as well, though. What's the trade that you have on that space?
Yeah, so that has really been standing out. I mean, there's been some really nice outperformance or relative strength in the biotech sector. That broke down a couple months ago, but has now been pretty strong, and it looks like it's getting ready to kind of it's just broken above a trend line. It's also above all the major moving averages. So I really like the strength there, and I like playing this via XBI, which is the equally weighted biotech ETF, because you are diversifying that single stock risk out of the equation. The trade that I like is the July 88.93 call spread, and you're just paying about $1.80 for upside potential going out a couple months in the biotech ETF.
All right, Christian, big thanks to you for joining us on Options Insight today. That, of course, is Christian Fromhertz of Tribeca Trade Group. Have a great weekend. From